I want to talk about a really important discipline that as we move into December and liquidity often starts to drop, this is so essential for traders. Understand when liquidity is falling, and this then in turn leads to situations where basically as traders, we should stay out of markets. And knowing when you have edge, when you don't have edge, knowing which conditions are better to trade in and which ones are better to sit out, it's really crucial for traders. Overtrading can be a big issue, but a lot of traders don't really specifically understand their edge, and that means they end up trading when they shouldn't. So it's really important as traders that we know when to stay out. The great Bruce Lee once said that patience is not passive. On the contrary, it is concentrated strength. And I think it's a really great quote for traders as well. Now, people might ask me, okay, well, the Norden method, you can trade like 40, 50, 60 times in a session. How can you talk about patience and staying out? Well, if in a Norden method, we might hold trades for 1 or 2 seconds. So even if I do 60 trades in a 3-hour session, if you think about it, and I'm holding those trades for 2 seconds, I'm only holding trades for literally 2 minutes out of that 2 hours. There may be a number of other trades that I canceled as well, but for the vast majority of time, I'm staying out of the market and only getting in when specifically I think my edge is there and I can pick something off. If you're a position trader, you're holding trades for 2 or 3 days, or a swing trader, the same applies as well. You need to know when to stay out. And I've often said to my students that really what will define you as a trader is your ability to stay out. Your losses will tend to come at times where you shouldn't be trading. And so if you can understand that and stay out more often, I think it's really, really valuable. And I try to say to traders that what you want are basically times where you're making money and then times where you're out, rather than times when you're making money and times when you're losing money. This way you can try to get off of that roller coaster and have a much more a smoother P&L equity curve, and it just saves you from the hassle. If you trade when you shouldn't, you're going to end up with little losses. You then might try and chase those losses, and then it then turns into a bit of a spiral. All of the time where the market was quite quiet and you really should have been doing nothing. So sometimes when you're struggling as a trader, don't necessarily just look for what new trades you can do. Ask yourself, are there times I can stay out? Are there trades I could have avoided? And avoiding those bad trades, avoiding those times will improve your P&L.